things off with our market insights for the week. The stock market is moving full steam ahead into new high territory. And here with me now to discuss the current investing environment and how investors should be positioning their portfolios now is Brian Nick, Chief Investment Strategist at Nuveen. Thanks so much for joining me today, Brian.
Thanks for having me.
All right, now solidly in new high territory. What is your take on the market right now?
Well, it's been a pretty extraordinary run over the last couple of weeks. I think we've seen the base case probably stay kind of where we thought it would be, sort of mediocre growth. We got the 1.9% GDP number for the third quarter, kind of confirming our sense that things have slowed down. The rest of the world doesn't look like it's speeding up. Might be stabilizing at relatively weak levels in China and in the Eurozone. But I think what's really happened to help the market get this extra boost is some of the downside scenarios seem to have melted away or at least diminished. You look at the idea that there's going to be a no-deal Brexit. That seems to have diminished for the time being. The trade war seems like it's gone off the front burner. The October tariffs were delayed or canceled. Looks like the same thing might happen to the December tariffs. So if we're at sort of the high watermark for tariffs, that's another sign that the markets may see it as a sort of an all clear to climb higher. And valuations still aren't as expensive as they were, say, 2 years ago, coming off of the passage of the tax cut bill. So we feel okay about where things are. We've been pretty surprised about how quickly they've moved. We're not looking for that same trajectory moving forward, but we're pretty happy with the underlying fundamentals supporting this market.
Interesting. So you think that the shifting story with the trade war is really just eliminating basically the worst case scenario, but maybe not setting us up for a powerful move higher?
Yeah, my message for the fourth quarter to investors is literally this isn't the worst case scenario. And I think that's been enough. I mean, so you see the tail risk start to get priced out. Interest rates rise a little bit. So this idea that investors are running for the most defensive, safe areas of the financial markets into government bonds. And even in Europe, rates have come up just a little bit. Not because I think that we've seen this spectacular new economic scenario unfolding for 2020, but if you were really concerned about some of the dangers out there, you're probably a little bit less concerned today and a little bit more apt to want to take a bit more risk in your portfolio.